Welcome to The Explainer. Today, we're going to tackle the UK income tax system. I know, it can seem pretty complicated, right? But stick with me, and in just a few minutes, we'll walk through the whole thing from start to finish.
So how much UK tax do you actually owe? I mean, that's the big one, isn't it? It's what everyone wants to know. But here's the thing. To get the right answer, you have to start somewhere else entirely.
That's right. Before you even think about pounds and pence, you have to ask yourself, am I a UK resident for tax purposes? And you might be wondering, why does that matter so much? Well, because that one little detail determines everything about what income the UK can and can't tax.
All right, so let's get into our first big question, your residency. This is absolutely the first step because it's the key that unlocks the whole puzzle. It determines if you're paying UK tax on just your UK income or on all your income from anywhere in the world.
And believe me, the difference is massive. Look at this. If you're a UK resident, HMRC taxes you on your worldwide income. That means money you earn here and money you earn overseas. But if you're a non-UK resident, they can only tax your UK income. It's a night and day difference.
Okay, so how on earth you figure this out? Well, the good news is you don't have to guess. HMRC has laid out a really clear three-step process. Think of it like a flowchart that leads you right to the answer.
And here they are. It's a three-step residency test, and you just work your way down the list. You start with step 1, the automatic overseas test. If you don't get a clear answer there, you move on to step 2, and so on. Pretty logical, right? So this first test, the automatic overseas test, is basically designed to quickly identify people who are obviously not based in the UK. We're talking about folks who spend very little time here or who work full-time abroad. Let's take an example. Let's call him Peter.
So, Peter spent just 40 days in the UK this year and he wasn't a resident before. Bam! Right there, he passes the automatic overseas test. His journey through the flowchart ends at step 1. He's automatically a non-UK resident. Simple as that.
Okay, but what if you don't pass that first test? Well, then you move on to step 2, the automatic UK test. This one checks if you're automatically considered a UK resident. And what's super interesting here is that it's not just about spending 183 days in the country. Check out that only home rule. Let's meet Lily. She only spent 60 days here this year, way under that 183-day mark everyone knows about. But, and this is the key, her only home is in the UK. Because of that one fact, she automatically becomes a UK resident. It's a powerful rule that shows it's not always about just counting the days you're here.
So, what happens if you're not automatically out and you're not automatically in? Well, that brings us to the final step, the tiebreaker really, the sufficient ties test. This is where things get a bit more detailed. It looks at your connections to the UK. We're talking family, a place to live, work, that kind of thing.
And this chart really shows you how it works. It's like a balancing act. The more days you spend in the UK, the fewer connections or ties you need to have to be considered a resident. And on the flip side, the fewer days you spend here, the more ties you need. Let's make this real with an example. Let's talk about Charles.
Okay, so Charles was in the UK for 60 days. Looking at the rules, for that number of days, he needs 3 ties to the UK to be a resident. And he's got them. He has accommodation, he does some work here, and he's been a resident in the past. So tick, tick, tick. He's a UK resident. But watch this. See how just one tiny change can flip the whole thing on its head? Okay, so what if Charles had worked for just 38 days instead of 42? It's only a 4-day difference, right? But it's huge. That drops him below the 40-day threshold for the work tie, so that tie just vanishes. Now he only has 2 ties. And with only 2 ties and 60 days in the country, he's suddenly not a UK resident anymore. It just goes to show you how important the small details are.
Okay, so let's say you've gone through all that and yep, you are a UK resident. What's next? Well, now we get to the numbers part, calculating your taxable income.
This diagram lays it out perfectly. You start at the top with your total income. That's everything you've earned. Then you get to subtract certain reliefs, which brings you down to your net income. And finally, you take off your personal allowance. That number at the very bottom, that's your taxable income. That is the amount the taxman actually looks at.
And that personal allowance we just mentioned? Right now, for the 2025-26 tax year, the standard amount is £12,570. Think of it as your tax-free buffer. It's the amount you can earn before you have to pay a single penny in income tax.
All right, we've got our taxable income figure. Now for the final part of the calculation, figuring out how the tax rates actually work.
So the UK has what's called a progressive tax system. That's just a fancy way of saying you don't pay one flat rate on all your income. Instead, your income is sliced up into different bands, and you pay a higher rate on the slices that fall into the higher bands. And as you can see here, it gets even more detailed, because different types of income, like your salary versus your dividends, can have their own special tax rates too.
Okay, so that's the core system. But of course, tax is never quite that simple, is it? There are always a few extra allowances and charges, little wrinkles you need to know about that can change your final bill.
And here's a big one. That £12,570 personal allowance, it's not set in stone for high earners. If your income goes over £100,000, that tax-free allowance starts to shrink. For every £2 you earn over the limit, you lose £1 of your allowance. It can actually disappear completely.
And there are a couple of other special rules to be aware of. You've got the marriage allowance, which basically lets you transfer a bit of your unused personal allowance to your spouse if you're a basic rate taxpayer. Then there's the child benefit charge. This is for higher earners, and it's a way the government can claw back some or all of your child benefit through the tax system.
So there you have it, the whole journey. Right from figuring out if you're a resident to how that final tax bill gets calculated. But the big takeaway? As we saw with our friend Charles, it's often the smallest details that can completely change the outcome. So now you know the basic journey. What small detail in your own situation could make all the difference?